Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, the 22nd of January, 2019. Just getting on to 2:35 in the afternoon. That's p.m. Central Standard Time. Markets down in the grains mostly. Wheat got a bid as there's concern that Russia may not be having as much wheat as thought and that they are cutting back on their exports at this point. At the same time, still a lot of problems going on between U.S. and Chinese trade. Today, a small delegation that was supposed to take place later this week, they've called off that meeting. The end of the month meeting, at this point at least, is still on. But there's the Huawei executive problem. There's the intellectual property rights. We have earnings season. I can go on and on. Another good piece of news is the USDA announced that all of their offices should be open, ideally this week from what we're hearing. They said in very short order. I know there were 984 that they had already ordered, but that sounds to me like they're going to have a couple of thousand now open. Weekly area chart of closes. In the soybeans, still pointing up. Yes, we're down for the week 7.5 cents. And yes, you've got to be a bit concerned about how trade's going to go one way or the other. But the market is still staying over and has upside bias since it's over the 18-week moving average of closes. When we come to the daily chart, it's a little different. You can actually see the levels of resistance showed up here and here. And when I put on the swing line, you get to see a little different story because you would think it's here and here, and it's actually a little different. You have a market that, God damn it. Good afternoon. Ira Epstein of Linn Associates with your agriculture update for this Tuesday, the 22nd of January, 2019, getting on to 2:35 p.m. Central Standard Time. Well, a down day in the grains, primarily in the corn and the soybeans. Wheat's getting a little bit of a bid as Russia has said that they're running out of export wheat at this point. They're slowing down the throttle, might be the appropriate term, and that gave the U.S. a little shot in the arm to the upside. In soybeans, a lower level meeting between the trade delegations of China and the U.S. was called off for this week. The big meeting is still scheduled. It may be pushed back, but it's still scheduled at least at this point. There's still the arguments going on about the Huawei executive. Department of Justice is not backing off, and they said they will issue the deportation request by the end of the month, and we should have that woman here, and then let the bigger delegations deal with it. We saw that there's a willingness on all sides to do something if there's something in that for them. In other words, the U.S. wants something to trade with. That could be one of the things. Down day in the energies via the weak Chinese readings. If you saw them, the worst readings that they've had in growth since 1990. But when I go to the soybean chart, and by the way, the USDA announced today that it thinks all of its offices are going to be open very shortly. I know this week they're trying to get about 1,000 of them open, but now I'm hearing reports it's going to be more than that. In any case, the weekly area chart of closes has stayed over the 18-week moving average of closes in red. I view that as having upside bias to the market with support back at 884.5, that number. When we take a look at what soybeans have done, you can see you had a break low, a rally high, you fell back, didn't quite get to that low, and now you're starting to see a market that's falling again. When you put the swing line study, same chart with the swing line, you see you have a lower low and a higher high. In my world, that means the market is not trending. A trend would have higher highs, higher lows, a downtrend, lower highs, lower lows. This is no trend. Lower and low, higher high, more of a trading affair. Where's the market falling back to? Well, if you look at the 18-week average of closes, this was Friday's close. Today you come down, you settled out at 909 and a quarter, above this number. You hit it today and you found your support. It's what I'd expect. Often, if you're down, you go back to that 18. If you're up, you go back. If you're not trending, you're looking to see where the springboard's going to come. When we take a look at the 100-day average of closes, that's looked pretty good recently. When we look at the Bollinger Bands, they're further away, both top and bottom. I'll say they're not in play just yet. When I look at momentum, flat. So we have a market that's sort of caught in no man's land. It's neither up nor down, just sort of drifting sideways. When we come to the meal market, what bothers me so much about meal is, generally speaking, if you have an uptrend in the soy complex, it's led by the meal. We're not getting that. The meal, if anything, has got lower highs. What about this low? That low's under that low, lower and low. So a downtrend. Now that the market's fallen, two levels of resistance, 313, 314.40. If the bulls are going to grab control back of the market, they got to get through those resistance points, not take out 309.10, and get back over last week's high of 316.50. Do that, and you could end up with higher lows, higher highs over the market, and possibly even turn momentum. You haven't done it yet. In the soy oil, today the market finished out at 29.06. If you look at the upper Bollinger Band, numbers 29.14, you got up to it today, you got up to it on Friday, you didn't do it on Thursday. So the market's up there, overbought, has hit upside targets. You can see the overbought situation here. I would expect pros are taking money off, not putting money on the table there. In the corn market, like beans, no trend. You can see the higher high, lower low. You've pulled back into support levels. In fact, to a level where the market's going to try to figure out what to do next at this 377 and three quarter, 377 and a half, which is the 100-day average in the 18. They're just sitting there. This is a market that I think is just sideways. In the wheat market, you've hit upside targets and you have entered an area that is overbought. You got up today again to the Bollinger Band, which you hit on Friday, and you reached up to the 100-day average and ran out of momentum. I would think that the market, while it's looking okay here, a lot of resistance right there. In the sugar market, the market is trying its best to play with the slow stochastic. As long as both numbers stay over 80, the market is said to be embedded. If the market gets one of those numbers under 80 on a close, then I look for price and the 18-day average to come together. What do the bulls have to do here? They literally have to get the market back over the last highs of 1308 and not let the market drift any lower to support their position. Yes, the bias is up and there's strong support at 1237.35, but I tell you, if you dropped and closed under these numbers and momentum turned down from here, you could be looking back into the 12s before you know what's going on, the low 12s. In the coffee market, we have a pattern of higher lows, higher highs stuck in sideways Bollinger Bands. And remember the black dashed lines. What they do is keep a market within them 95% of the time. So when you get a trend, you can see how it works within it. It doesn't look that sideways action. When you're looking for the trend, this is very typical. I will define the swing line as being up, support at 107.75. You don't want to get back under this break low that you had all the way right here, which is 140. That's a heck of a lot of risk. You're talking support, did I say 107, 102.75 support. Back under there is 200 and some odd points at 375 a point. It's over $750. I'm not thinking that there's anybody being too aggressive. In the cocoa market, the downside targets were reached today. Now, if you take a look on Friday, the market was dropping down. The trend was lower highs, lower lows. 2281 was the first support at the lower Bollinger Band. The market was not yet in oversold territory. If that gives ground, I'd be looking at the 100-day average. And that's what happened today. And the market managed to come back and settle above that 100 average. That doesn't mean you can't go lower, but you've hit your downside targets. In the cotton market, you went up to the upper Bollinger Band, you're backing off, momentum's down, you have no trend. Lower low, higher high. I want you to look at these black dashed lines. That's where I think you're at. You're stuck in no man's land, just trading sideways for the moment. In the cattle market, the short-term trend turned back to the downside. Lower highs, lower low. The market finished today at 126.07.5, under the 126.15 level. So the bears grabbed control and momentum is with them. So they got bias with them, momentum, and the trend down. You'd have to get back over this high that you just made on Friday, which was 127.52.5, to negate the pattern. You've put into play the possibility that if it drops the lower Bollinger Band, maybe the 100-day average. The feeder cattle are just marching to their own different beat. This is called riding the Bollinger Band. You get under it, you get back over it, you close back under it, and momentum's pointing down. Certainly oversold, but this is how markets break out of sideways action. You see that sideways action? You start pushing on the Bollinger Band. If you keep pushing on it, you have to first get to oversold, but this market is trying to define that it's in a downtrend, not an uptrend. I'm moving to the April lean hogs now. I can argue lower highs, lower lows, and admittedly, this high right here got up and over that. It's not an ideal chart picture. The resistance, the 18-day average, the bias is down since you're under the 18. Momentum is up, there's divergence, and you're fighting a battle at the 18-day average of closes. Let me tell you something I do all the time. I don't know about you. I read other people's newsletters. Do you? I read market reports. Do you? What I'm looking for are ideas. Now, I'm not saying just trade ideas, ideas. I start you off every morning with my ideas. If you want to be an in-and-out trader, you want to look for movements, you want to try to catch a position that might last a bit, I review all this each and every morning. Have a cup of coffee, you sit down, you look at this video. I cover the stock indices, currencies, the interest rates, meats, grains, softs, energies, in a certain sequence every day so you can jump along the tape where you want to get. I will talk chart action, what I think the pros are doing, active traders, the technicals and fundamentals, and I promise you I'm going to throw out trade ideas at you. How do you get this and what do you do with it? Well, it's a subscriber video. It won't break the house. It's $7.95 for 30 days. $7.95? You can't afford that? What the heck? You shouldn't see it. Give us a call. You can go to our website, and under the website, either go under products or education. You can sign up right there. You don't need a coupon, and away you go. I'm Ira Epstein. You have a great day.